Over to the markets now. The Nigerian equities market sustained 2 weeks of sell pressure to reach a 3-year low last week as the benchmark index closed at 27,287 points. This represents a 20.3% year-to-date decline. Ayodeji Ebo, head investment research at Afrinvest, joins us to share his outlook for trading this week. Ayodeji, it's great to have you on the show with us. So let's kick off, first of all, by talking about the activity that we saw last week. Of course, we saw the NSE all-share index hit a 3-year low midweek, and then things started to pick up. And week on week, the index is actually up 5 basis points or so. Now, it's interesting to see that most of the sectors actually gained last week. I mean, the banking sector was up. The industrial sector gained 2.5%. It was the biggest gainer. We even had Dangote Cement, which, you know, we know how that stock moves the market. That stock went up 2%. But in the oil and gas space, we had a 6.2% drop in those stocks. Let's just get a quick summary of the activity and how that is likely to impact on trading this week.
Okay, thanks, Didi. Last week, the bearish sentiment continued at the beginning of the week, but towards the end of the week, when the market reached its 36-month low, we saw investors got attracted and tried to identify some stocks that still present values despite the overall bearish sentiment. So, like you rightly said, banking space, investors took significant position in that. We saw volume week on week increase significantly by over 30% last week. So we feel investors, as a result of, based on the reduced share price, dividend yield would have increased significantly, and investors are trying to do early bet positioning in terms of as they expect full year 2015 result. So we see investors are trying to just identifying stocks that have been consistent in terms of dividend payout, and for that to be able to also cover up for this decline we've seen in yields within the fixed income market. So when you see yield rise to as high as 9%, in addition would be expected capital gain. So investors may want to increase their exposure to the equities market and reduce the exposure to the fixed income market.
It's certainly been, a difficult, year for everyone. Most companies, have the same, sentiment. They all feel that it's been quite a tough year. So given that, what are your expectations for full year 2015 earnings?
Yeah, so full year 2015, we expect it's still going to be challenging. Well, I'll look at it sector by sector. Within the banking space, we know for most of the banks, they've not been able to increase lending significantly, even despite CBN moves to encourage banks to lend. So you don't expect significant growth in terms of the top line. Also, bottom line, we expect impairment charges to also tell significantly on the bottom line of the banks. When you also go to the consumer goods space, the CBN, the foreign exchange administrative policies, has also been impacting on their earnings. Most of them have not been able to replenish their inputs. So we expect that this would also impact significantly on their bottom line, because cost of goods would also grow up significantly. We've also seen, in terms of consumer spending, because of the harsh economic environment, we've seen consumer spending also decline. So when you see reduction in demand, also you see costs in terms of input also increasing. So you expect that the bottom line will also decline slightly. So in our view, there will still be some companies that will still be able to weather the storm. We saw in 9 months 2015, we saw Nestle was still able to grow bottom line slightly, but we feel it's still going to be challenging. So we are cautiously optimistic in terms of what we should expect the full year end. That doesn't remove the fact that there will still be some stocks that's based on their 9-month result. We've seen what they've been able to do, but when we see their audited, which will be the audited report, then we feel that there may be a slight decline relative to what we've seen in 9 months.
Now, the index is down over 20% year to date. Can you just quickly run through or give us a quick summary of some of the factors, that have impacted on the market significantly this year, especially from the macroeconomic side? And, what will it take for us to go back into, positive, trend on the NSE in 2016?
Okay, interesting. Nigeria, we can't rule out the significant decline in crude oil price, which started last quarter of last year and has trickled in because we're a mono economy. Investors would be, when you look at in terms of balance of payments, we've moved from significant surplus to now deficits as a result of the reduction in terms of dollar earnings. So this has also affected the growth in the reserves. So these are some of those things that, especially the foreign investors, are citing. We've seen significant capital outflow in terms of FPIs. So these are some of those things that have really impacted the market. Some of those things we expect that we'll see that will help drive sentiment in 2016 will be the medium-term economic framework. We expect it to come out anytime, maybe within the next 2 weeks. This will also will send a powerful signal, depending on how articulate the policy is. Investors or Nigerians will be expecting to see significant increase in terms of expenditure mix, capital expenditure increasing significantly, contrary to what we've seen in the past, such that it's channeled towards key sectors that can help drive this economy. Recurrent expenditure, yes, with the introduction of the Treasury single account, it has helped curtail in terms of expenditure, but we expect to see further reduction. That then we also expect part of what has been contributing significantly to the recorded expenditure, which is the unproductive, that's the subsidy amount, unproductive spending, which we call the subsidy spending, which has not really added significantly to Nigerians. We expect this to be rechanneled into other more productive areas. We don't rule out further devaluation, which to the government, one is to increase their top line in terms of dollar earnings, and also it will also help reduce some of the uncertainty that we've seen within this space that has hampered in terms of production and also scared away foreign investors. These are some of these things that even foreign investors will be watching out to see, to show that Nigeria, even on our part, will try to do our best to see how we want to reorganize our economy in view of the macroeconomic headwinds that we've seen so far.
And then when you take a look at the OPEC decision, obviously it looks like they're not changing their stance anytime soon. Now, how does that impact on us as a country here in regards to our budget and the outlook on the naira as well?
Yeah, simply just tells us there's no, in terms of oil price, there's no rebound in sight. So it shows that we need to further see how we want to diversify our revenue base in terms of the economy. So for the government, would like to see the benchmark, the oil price benchmark, to see where it's pegged. The reserves, it means that you don't expect significant increase in the reserve. Currently, it's below the $30 billion psychological line. So foreign investors would also be looking at this. Just a matter of time. How much time does the CBN have to continue to defend the naira and try to hamper growth within the risk space?
All right, Ayodeji, thanks so much for joining us in studio. Ayodeji Ebo is Head Investment Research at Afrinvest.